You are listening to chartingwealth.com for Wednesday, the 27th of June, 2018. We see stocks are up for the day along with bonds. Gold is down. Let's jump into the S&P 500 first on our weekly chart. What do we see going on? Well, it looks like we're entering into our second week of down movement. We're only 2 days into this latest 5-day candle, but it is a big red down candle, particularly compared to the prior red spinning top, which of course meant indecision tending down. We see that tending down playing out right now. We see the price percent oscillator losing momentum, derivative oscillator also losing momentum. Price percent oscillator looks like it's getting closer and closer to crossing over. And again, if we continue to see up days like we did today, even though it was only 0.20%, that may happen, may be less likely to happen as the week goes on. We look at our 2-day chart. We're only the first day into this latest 2-day candle, but again, our Heikin Ashi candlestick, which shows average pace, shows us a solid red down candle. And again, if you want to know more about Heikin Ashi candlesticks, how they're formed and how they are made, please listen to our very popular Heikin Ashi candlestick video we have available at chartingwealth.com. I think we've got about 77,000 listens to that or views, so please be one of those. Pump it up to 80 or 100,000. What do we see? We had a 2-day crossover back on the 25th going down, and we of course are going in now to seeing even more and more crossing over. And you know what? We need to redraw our trend line at this point. A little bit premature, but we already have several candles heading down. Let's see how many we can connect so far. Well, I tell you what, since we haven't really drawn the latest candle yet, we don't like to draw candles, use candles for trend lines until they're totally drawn. It's just the first day of the latest one. We'll use the prior one, but again, we've established a down trend there. Derivative oscillator gaining momentum, price percent oscillator heading down. And of course, what's up on our 4-hour chart? It continues to move down as far as the derivative oscillator goes, still down, although it's losing downward momentum. Price percent oscillator still headed down. We look at our 4-hour chart as far as the candlesticks go, and of course we had some up movement in the morning, pairing off a little bit in the afternoon, but a sideways slide. Is that going to stop the down movement, or is it just a breather? We'll keep an eye on things. The indicators don't tell us that that's happening, but we'll go ahead and just watch. And again, very interesting whenever we see the 2-day and the weekly intersect in down moves, may be portending more of a down move there. We'll just keep our eye on things. Of course, we don't have a trade on the S&P 500 with the 2-day and the weekly at opposition. So we did have a wonderful opportunity for trading over those 2 weeks, that first week ending the 8th and then through the 15th of June. Then, of course, we started pulling out or pulled out of those positions in the prior week ending the 22nd of June because of that rollover that we saw occurring. Okay, now let's go back to the charts. We're going to move on the weekly to the Qs. That's the NASDAQ 100. We, of course, see another red down candle forming, just like we see in the S&P 500. The prior week, not as much down movement on the Qs as we saw on the S&P 500, but we have breached the weekly trend line, and of course we had a crossover going down in the 2-day chart. We see the derivative oscillator losing momentum, price percent oscillator headed down on that weekly chart. We see on the 2-day chart a crossover as we noted on the 25th, and we see now that the derivative oscillator has gone red quite strongly, price percent oscillator headed down. We are drawing our second big down red candle. Of course, it's not completed yet. We look at the 4-hour chart. Looks similar to the S&P 500. Some up movement in the morning, paired off in the afternoon. Derivative oscillator losing downward momentum. Price percent oscillator still headed down. So we don't have a trade on the Qs or the S&P 500 because of the changeover in the charts. Our weekly going up, 2-day going down. Remember, both the weekly and the 2-day have to be heading in the same direction either way for us to be looking for a trade, an entry point on that 4-hour chart. Let's move on to bonds, up 0.14%. And of course, we had a weekly vertical crossover going up back on the 25th. And we're still trying to get up to where we were. Looks like we've just gotten there over the course of the past day. It looks like all the way back to where we had popped up to on the 21st on our Heikin-Ashi candlesticks. Still haven't hit that highest of highs at 122.48. But at 120.85 or 87, we are right there. We see the derivative oscillator gaining upward momentum, just stair steps moving up. Price percent oscillator heading up quite nicely. Price movement above the 2-day and the weekly trend lines. We look at the 2-day chart. What do we see? Continuing to move up. And again, it has moved up where it hit back on the 19th. So far, the first day of this latest 2-day candle. Price movement above the weekly and the 2-day. Derivative oscillator gaining a little bit of momentum. Price percent oscillator heading up. We look at the 4-hour chart. What do we see there? Well, again, it has moved a little bit above where the candles had ended back on the 25th, both in the morning and the afternoon, but still hasn't hit the high that it did back on the morning of the 25th of June. We'll just continue to keep our eye on things. Don't know if we're seeing a ceiling here or not. Derivative oscillators gaining momentum. Price percent oscillator headed up. Some of you may have jumped in there after that up movement in the morning on the 25th, riding that pony up. We'll see how far that goes. Again, keep your eye on the prize, which is the price movement on the 4-hour candlestick, if indeed that's what you jumped in on. As far as the indicators go, they're looking good. Like we said, derivative oscillator headed up, price percent oscillator headed up on that 4-hour chart. You're going in the right direction there with the 2-day and the weekly, moving in the same direction after that pullback ended on the 4-hour chart. Lastly, we'll take a look at gold. Gold continues to move down 0.53%. You remember gold crossed over going down back in mid-March, then went up for a few weeks and started going down in earnest back on the week ending Friday the 27th of April. And pretty much, except for 2 weeks, has been in a downtrend ever since then. In fact, never breached that weekly trend line, still moving down quite nicely. We can see the derivative oscillator continuing to gain downward momentum, price percent oscillator moving down. Of course, gold now down to, for the day, ended at about 119.65 on our Heikin-Ashi candlesticks. We look at the 2-day chart. What do we see? Well, we are going into our 5th 2 days, so that's going in. This is a 9th day of strong down movement. When that candle finishes drawing, if it continues down, of course, 10 days, 5 2-day candles, a down movement. And of course, we saw a 2-day crossover going down back on the 2-day candle ending on Friday the 15th. And we're just continuing to see acceleration and down movement on the derivative oscillator. Price percent oscillator headed down nicely. And we look at that 4-hour chart. What do we see? Well, we see that it cranked over again in the morning. A little bit more down movement in the afternoon. Derivative oscillator gained a little bit of momentum after losing it in the morning on the way down, and the price percent oscillator appears to be headed down a little more thanks to that afternoon down movement. Wondered if things were going to pair off somewhere around the 120 mark or so, and of course it hasn't. It's moved below that down to about 119.33. So again, it's nice to see that 4-hour chart working quite well again, at least on this latest move down. And we haven't had really a jumping in point because we haven't had a pullback yet. So we'll continue to keep our eye on things as to when we might be able to jump into a down move in gold. If that ends up being possible, remember, all moves, it's not possible for us to find entry points. And you know what you do when that happens? You don't get into the move, because if you can't find a safe and reliable entry point, you don't risk losing your money. Rule number 1, don't lose money. Rule number 2, make money. That's where we are as we end the day on Tuesday and go into Wednesday, the 27th of June. We so appreciate you being with us. If you haven't purchased our book already, please follow the link at the top right-hand corner of the video. If you happen to be watching the video now, that'll take you to a link where you can purchase our book. God bless so much. We appreciate you so much, and thank you for being with us. You have questions, problems, concerns, let us hear from you. CW@chartingwealth.com. God bless from the whole team here at Charting Wealth World Headquarters.